Let's get you a fundamental view on the market then. And joining us live on Street View at lunch is Mayuresh Joshi, VP Institution at Angel Broking. Mayuresh, always a pleasure having you on right here on ET Now. Firstly, what's your sense? What is a possible trigger from here on that could take the market a little higher?
Afternoon, Sandeep. I think most of the result season is out of the cordon now. So I think you're looking at how the monsoons are basically panning out over the next few weeks, whether they're hitting the Indian shores on time. And again, I think the key macro data in terms of how the WPI numbers are coming in, how the CPI numbers are coming in on the domestic front, which shall be a guiding light on how the macro data actually pans out and also gives a direction to the RBI in terms of their monetary policy. So if the data assumingly going as per plan, I think RBI might cut in the rates, but then the key factors remain is how the transmission of these rates actually happen into the system so that it impacts not only the capital and investment flow from the private capex side, but generally as well. So I think the global cues will still play a factor. I think the risk on risk off will continue as we have seen last week what happened with Nikkei and the corresponding effect on the Indian equity markets. Having said that, I think with the key triggers in place, I think we should expect the markets to stay in a very tight range between 5,800 on the downside and possibly 6,200, 6,250 at the higher end of the trading band.
Mayuresh, what's the call on Coal India now after a good set of earnings, and would you re-rate the stock by any chance?
Afternoon, Aisha. I think after the earnings, I think it was a pretty decent performance from Coal India. I think the offtake was decent at almost at 129.95 tons against 122. The lowering of the expenses was obviously because of 2,000 crores going off because sequentially I think they'd taken a one-time hit. The coal prices being high can add around 2,000 crores to its balance sheet in FY14 as well. So yes, I think most of the negative headwinds that were playing on Coal India, I think to a certain bit have got abated. So in my opinion, I think Coal India should find a decent amount of bottom-up support at around 3.5, 3.10 kind of levels. So if the stock does decline at those levels, I think one can start accumulating the stock. Having said that, I think you should also keep in mind the OFS that can come in for Coal India. And again, the kind of volume growth that is expected. So I think the management is very hopeful of doing around 492 million tons in the coming fiscal. So if that happens, I think, and the realizations improve, they can definitely impact the balance sheet of Coal India in a positive way. So yes, we are keeping a positive stance on Coal India post its result. But then again, I think watch out for how the OFS pans out. And if it declines a little bit lower from here, one can definitely start accumulating Coal India with a couple of years perspective to deliver good returns in terms of both balance sheet efficiencies as well as return ratios.
What about FMCG stocks, Mayuresh? There seems to be this whole renewed thrust on consumer stocks once again. What do you make of the FMCG pack, and what would be your top picks in this basket?
I think we are generally liking the FMCG pack as a whole. So I think if our earnings estimate go for FY14, I think we are estimating that FMCG along with banks should give a good amount of support to the markets. Having said that, I think ITC from the large caps, I think remains our preferred bet. And within the mid-cap universe, I think we're liking something like a Dabur, we're liking Emami. We were bullish on Britannia. We in fact are bullish on Britannia, but with the kind of move that we've seen, I think valuations have become a little bit too rich. Having said that, I think Britannia can be poised for a good 20% growth going forward. But then the vagaries of input costs, assumably with wheat, soya, palm oil, I think does play on these stocks. So if Britannia declines a little bit from these levels, on the structural side, I think Dabur, Emami with their stories playing out can give a good amount of revenue CAGR and even an EPS CAGR going forward.
Mayuresh, how would you approach the pharma space? Because on one hand, you do have outperformers like a Sun Pharma, earnings as well slated today. Cipla has been performing well, as has been the case with some of the mid-caps. And then again, you have cases like Ranbaxy, wherein the news flow has completely thrashed out the stock.
I think our preferred bets in pharma still stay with the large caps. I think so. We are liking Sun Pharma. I think the synergies from its overseas acquisition from DUSA and URL should actually play out positively for Sun. Again, Toxic should play positively in this quarter at least, which should at least add around $30-35 million in terms of revenues on its bottom line. So going forward, I think with the cash on its books, I think it is poised for good growth going forward. Though Taro did disappoint on the operating metrics front, I think it's still poised for good growth in the US generics market. market. So in our opinion, I think Sun Pharma can post a good set of numbers even in this quarter. And I think we remain bullish on this stock on declines, along with stocks like a Lupin and a Cipla, which with its South African subsidiary can also do well going forward. Out of the mid caps, I think we are very selective, and we definitely like Glenmark, which has posted a good set of numbers, and something like an Aurobindo Pharma as well, where we believe there is huge amount of potential going forward, especially with the ARV formulations and the generic formulations, and especially in the kind of CRAMS business that it is into. So I think overall within the pharma space, I think you have to be a little bit selective. Though valuations are a little bit rich, I think if you play out a structural story, most of these stocks should do well over the next 2 years.
Resha, call on the oil and gas space, and specifically on Reliance Industries. You've seen the stock rally in trade on the back of that gas discovery in the KG Basin. What's your sense on RIL? How much more of an up move can we expect? And on the broader oil and gas space as well, because we still don't have clarity on gas pricing.
Absolutely. I think the gas pricing is still something which is being debated upon on kind of a hike you're looking at. From 4.2, the ministry is suggesting doubling, but one of the ministries is suggesting that 6.7 looks very feasible. But then that can add on to substantially to the burden of the fertilizer ministry and the power ministry as well. Having said that, I think generally the industry overall is under regulatory control even now. So even though the diesel decontrol has taken place and is continuing in the interim, there is still some amount of stickiness. Having said that, I think coming specifically to Reliance, I think that stock was moving in a very tight range between 740, 750 to 820. And then the movement in terms of negative catalysts had actually played out on the stock price. Going forward, I think any new exploration activities that takes place, like they've just announced last week, should have a positive impact on the stock. And any positive rub-off effect in terms of gas price revisioning should also play very positively for the stock. So we remain positive on the stock, and one should accumulate Reliance on declines with a couple of years perspective, and the stock can deliver excellent returns in our opinion.
Mayuresh, finally leave us with your top ideas. What is it that you're recommending to your clients from a short to medium term?
I think if one goes by our recommendations, I think we are liking LIC Housing Finance on declines. I think that stock is looking decently poised for a good up move, assuming the kind of business it is into and the kind of growth that the company expects. Again, I think one of these power stocks, Power Finance Corporation and Rural Electrification, I think these stocks are looking good on declines. So I think these are some of the ideas that we are suggesting to our clients from a short to medium term perspective.
Mayuresh, we'll leave it at that. Thanks so much for joining in with that perspective right here on Markets at Lunch.